Obviously, a little choppy action here at the open, but we're up 7 points on the Dow. Let's get to Bob Pisani. Bob.
Yeah, we're all going to be living in the digital future, representations of us. We tried to get to 29,000. We knocked right on the door of it for the Dow. It's faltered a little bit. We've come back. I think the important thing is the risk-on trade still out there. Emerging markets still strong. China, these have been strong all throughout 2020 so far. Semis on the upside. Banks, yields have faltered in 2020. We're not going up anymore in the yields, and oil's below $60 again. So these two trades, the banks and energy, showing some signs of aging, getting a little long in the tooth. The question is, we've moved up a lot. Is this peak bullishness or not? Well, it's not clear, but we've got very narrow equity leadership. We've been talking about this all week. I'll show you some examples, and that makes me very nervous. 18.5 times forward earnings on the S&P for the multiple. That's near where it's the highest level it's been in 20 years. Maybe not the peak, but it's near 20-year highs. That's an issue for the markets overall. Just take a look here about, I know we're not at 29,000, but there's a very, very narrow group of stocks that are moving the markets forward. Apple, of the last 1,000 points, Apple is 308, 182 for United Health and Goldman. Put it together here, and you've got an enormous number of 2/3 of the gains in the Dow in the last 1,000 points is 3 stocks. You throw in McDonald's and Visa, like 4 other ones, and 7 stocks are essentially all 1,000 points of the gain. That's very narrow leadership overall, and it's even worse in the S&P 500. Remember, we're up 1.2% so far this year. Well, look at what's going on with some of the other stocks in the S&P 500. So Amazon, Apple, for example, is up 5% so far this year. Put up the next one, Apple. Microsoft's up 3%. Google's up 6%. Amazon's up 3%. Facebook is up 6%. The top 5 stocks in the S&P 500 are just killing it. They're just killing. They're way outperforming the overall S&P. And this is why the S&P is getting pushed up so much. You want to be careful. This is what narrow leadership starts to look like when the market starts getting very, very frothy at the top. So what's next? What happens now? So we've got the jobs report, maybe a little bit disappointing on the terms of the wage growth, but overall it was roughly in line. Remember, the 90% confidence level on the jobs report is 110,000, plus or minus. That you could drive a truck through these estimates. So this is roughly an in-line report. It was good enough for the market. The question is the decent information really enough to move the market forward with this level of frothiness? January 15th, the president said we'll have the trade deal. The 29th, we'll have the Fed meeting. It's going to be difficult to move forward and spark investor enthusiasm with this basically good news at this point because the market's so expensive right now, and that's the issue. What will it get? My opinion is it's going to be the earnings revisions, positive or negative, that's going to be the market mover in the next several weeks.